Hey everybody, we are going to talk about a stock that's actually up by 47% so far in 2024, and I think will beat the market once again in 2025. Talking about PayPal, PYPL, and I'll go through why I think it is still a good buy in just a little bit. Before we dive in, please take a minute and check out fool.com/Frankel, the link you see on your screen. It's the best way to support this work I'm doing on YouTube. Get the top 10 stocks to buy right now from the Motley Fool. Again, fool.com/Frankel. So let's dive right in. I want to share my screen real quick. So I'll actually go out on a limb and say not only will it beat the market, even if the market has kind of a flat year or something like that in 2025, I think PayPal will be up another 20% by the end of 2025. The three kind of headlines, and then I'll go into each of these. Strong efficiency improvements in the business. A lot of management's current initiatives are not reflected in the numbers just yet, and they're allocating capital aggressively in a very positive way for shareholders. So let's start with the efficiency improvements. So basically, the big kind of theme since Alex Chris took over in late 2023 and built out his whole new management team is that so far management's done a great job of optimizing the business as it exists today. Revenue's growing decently, up 6% in the latest quarter. 9%. They're doing a great job of engagement among the user base. The average active account is, making 9% more transactions than they were a year ago. But if you look at this, that earnings per share grew by 22%, which far outpaced revenue growth. That just tells me the business is getting a whole lot more efficient. They've right-sized the headcount, things like that. Active accounts are up less than 1% year over year, but we did see a slight acceleration in the third quarter. And the holiday quarter could be very interesting, especially with some of the initiatives I'm about to talk about. So other than just working on efficiency, in the past few months especially, the management team has been very busy. Earlier this year, they announced they were building out an ad platform, which is a natural fit. I mean, PayPal has spending data on over 400 million Americans through Venmo and PayPal. Great spending data translates to valuable ad space. So this is new as of this year. It's still just getting built out, but they made a great hire to head it up. The ad platform is being led by the former head of Uber's advertising. A lot of success there. So I'm really excited to see where that goes. Again, still in the pretty early stages. PayPal's Fastlane is its new speedy checkout product. It rolled out in August on a wide scale, and it's already partnered with some companies that you think of as PayPal competitors, like Adyen, Fiserv, Global Payments. All have either started or expanded partnerships with PayPal to offer Fastlane checkout to their customers. PayPal Everywhere is another cool initiative. This is actually their biggest ad campaign ever. That they started in September. It's essentially a cashback debit card that can be used anywhere. Credit cards are accepted. It has some great consumer offers that you can stack on top of the 5% cashback that the debit card offers. Really impressive product. And again, just starting to roll out, just starting to gain traction, not really reflected in the numbers yet. The partnership with Shopify could be huge. Shopify is, by a significant margin, the number 2 e-commerce retailer in the e-commerce platform in the United States behind Amazon. And Shopify checkout will now feature PayPal in the United States. Previously, PayPal was just on France on Shopify. So pretty big expansion of that partnership. And they keep rolling out new adjacent features that could significantly expand engagement. Just to name one example, money pooling is something that they just rolled out on their platform. So, for example, if you're taking a trip with a group of 5 friends, you can use your PayPal and Venmo accounts to start kind of stashing money in a pool instead of everybody just Venmoing here and there and reimbursing each other and things like that. You can just actually pool your money to share expenses. Families can do that. And, there's a lot of applications there. That's just one example of one of the cool features that they've been rolling out. But the real kind of takeaway is that these features are not yet reflected in the numbers. Like I said, the ad platform is still in the very early stages. PayPal Everywhere is just in the past few months. When we get the holiday quarter results in a few months, it could be an impactful part of the business. Shopify partnership is still pretty new. That was, I think, announced in October. But all this is very new and has not been reflected in the seemingly stagnant growth numbers so far. So capital allocation is another thing. PayPal has a lot of cash on its balance sheet, and all of its free cash flow. It's earning between $5 and $6 billion of annualized free cash flow, and management isn't putting at least that much into share buybacks right now. They apparently still think the stock is a great value, and the best way to allocate their capital as it comes in, because they spent $1.8 billion on buybacks in the third quarter alone. So that alone could help drive returns. They're doing a great job of that. Great capital allocation combined with expense reduction is a winning formula. And if management can successfully return PayPal to the growth that it had not that long ago, it could be a real winner. So the key takeaways are, one, that PayPal is a much more leaner and focused business than it was a couple of years ago. If you remember a few years ago when it was rumored that PayPal was going to buy Pinterest, they kind of just had a disjointed growth strategy and thought that the pandemic era wave of user growth was just going to take care of itself. They have about 430 million active users. It wasn't that long ago they said we were going to get to 750 million within a couple of years, and no real plan on how to get there. So now they're definitely more focused on what they do best. Leaner operation. They got rid of a lot of excess headcount. Most of the new initiatives aren't fully reflected, as I've mentioned. And I actually think that 2025 could be a very pivotal year in PayPal's growth story. So they got the profitability equation down. If they can return the business to, a double-digit annual revenue growth rate, or start adding millions of users each quarter again, like they were before the pandemic, we could definitely see a lot of multiple expansion. And PayPal still trades for something about 20 times earnings, which, given the cash on its balance sheet and its future potential with all these changes and moves, I don't think is unreasonable. I'd love to know what you all think about PayPal as an investment. Please leave me any comments or questions you might have. I'll do my best to answer any of them individually. I'd love to hear your predictions for PayPal as we head into 2025. Again, PayPal's up almost 50% year to date, 47% as I'm recording this. I'm saying that PayPal is going to gain another 20% or more in 2025, regardless of what the market's doing. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from the popular product Stock Advisor. Stock Advisor has beaten the market by nearly 5 times. So go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 767% as of July 5th, 2024, and are measured against the S&P 500 returns of 163% as of July 5th, 2024.